Tax planning is likely far down on your list of to-dos before 2016, but there are a few steps you can take before that ball drops in the new year, and that could save you some time and money as the tax deadline approaches.
CBS News business analyst Jill Schlesinger is here with some tips to consider before the year ends. And I think my first question is, why should I even consider anything about taxes before the year ends?
Because
I wait till the last minute like everyone else.
Okay, because how about if I figure out a way for you to pay for part of your holiday shopping experience? How about if we figure out a way to save or make you some money?
That works.
And some of these things are calendar year-end moves that you really have to make.
Okay.
If you don't do it, okay, I get it, fine. No complaining if you got a big tax bill next year. I told you so.
But two of your tips have to do with recognizing your gains and losses before the end of the year. Why is that so important?
Okay, so let's say that you have a taxable investment account. You will have winners and you'll have some losers in there. So if you have a winner that you maybe sold something earlier in the year and you've got to pay capital gains on it, now look in your portfolio and say, wait a minute, is there a loser that I can take? Because your losses count against your gains. You might be able to wipe out the capital gains tax completely. Now, if you've got more losers than winners, here's the cool thing. Okay, no big deal. The government actually allows you to deduct up to $3,000 against ordinary income. If you had a terrible year, like Vlad maybe bought like the worst stock ever, and he's like, oh, I got $10,000 of losses. You take $3,000 this year against ordinary income. You can carry forward those losses to the future years. Get last year's tax return out as a guide. You might have some moves to make.
You also have a tip that has to do with paying other people's medical bills or their student loans.
Yeah, this is kind of a cool thing. So we know that gifting is very popular around this time. There's a rule that you can gift up to $14,000 to anybody, okay? But let's say you're really wealthy and you want more than $14,000. You can write a tuition bill for your grandkid or your and that's really important. You can write that directly to the school. It cannot go to the parent and then the parent pays the bill. You've got to write the check directly. That's a gift. You can pay a medical bill for your parent also directly to the institution. Doesn't count as a gift. These are some clear ideas for usually wealthier Americans, I want to be clear.
Right.
But if you're going to be gifting throughout the year, this is something to keep in mind.
So I had said student loans. You're talking about directly paying tuition.
Exactly.
So it doesn't have a negative effect on the recipient's tax bill?
It does not.
Okay.
And so, it's not going to the recipient, it's going to the institution. Now, remember, you write a check for $14,000 to any person, no tax due. If you're living large, you hit the lottery, you want to write a $50,000 check, you absolutely have to declare that. You have to file a gift tax return.
The other thing that's really interesting is you're advising people to bunch their itemized deductions together. Why is that? Like,
okay,
what's it with that?
There are so many weird rules in the tax code.
Yeah.
It's annoying. I get it, okay? Like, you look at this makes your eyes glaze over.
As soon as you see the 1040, you're like, yikes.
No. Okay, so if you itemize your deductions, one of the things that we talk about is that to get over certain thresholds, to deduct, say, miscellaneous business expenses, you have to have a certain amount of deductions in a given year. So if you need to get over a certain threshold, you bunch those deductions in a tax year when you're going to be in a higher tax bracket. So if you have a bunch of stuff that's spreading out over a few years, you may not get those deductions or they could get phased out. Try to bunch them together, especially if you are a small business owner or you have self-employment income. Looking ahead at what your income is going to be is vitally important, okay? You want to say, okay, I'm a contractor, and I think that this year is going to be a huge year for me. Next year, I don't have too many jobs on the books. Well, if your tax bracket's higher this year, what do you want to do? You want to start spending your expenses today. Go buy yourself a new computer. Go upgrade your software, because that deduction will be more valuable to you in a year where your tax bracket's higher.
Well, you've managed to do what I thought was you would be unable to do. I'm thinking about taxes and I'm liking it.
There you go. It's pretty good. Find the money, baby.
Jill Schlesinger, thank you so much. And for more year-end tax tips, just go to jillonmoney.com.